Hi, my name is Arima. I am the co-founder and CEO of IperionX. And at IperionX, we're looking to build an all-American sustainable, low-carbon, circular source of titanium metal for use in a range of industries from automotive through to defense.
Okay, so thank you very much for the introduction. Looking forward to the next half an hour, 40 minutes or so. In this interview, I'd like to kind of dig into various aspects of the company, where it's come from, where you think it's going to, looking at both the kind of the makeup of the shareholders, you know, how that has evolved over time, the makeup of the board, and also you know, how you value yourself and how you see the trajectory of the company going. This is part of the kind of the validation and valuation series that we're working on. So just before we get stuck into the detail, can you just give me a quick overview of kind of where the macro is, because it's been pretty choppy markets, pretty tough for for everybody in the space. Your market capitalization has been, you know, it hasn't grown much since we last spoke about 3 or 4 months ago. You're around 105 million Aussie. Market's pretty depressed, pretty shaky out there. Can you just kind of give me and we've got the midterm elections coming up. Could you just give us a quick overview of where you see the kind of the macro, please?
Yeah, I think from our perspective, the what's happening in the markets with inflation is and interest rates is what it is, and we'll have to see how that pans out over the next few months, next 6 months, and see when you know, what happens in the shorter term. That being, you know, shorter term in my opinion is sort of 6-12 months out. But over the medium to long term, we continue to see tailwinds in the industries where we're operating. What we're trying to do is hit on a few thematics which are not going away in the short term. That being reshoring critical mineral or material supply chains in America, reshoring those sort of supply chains that are tied to energy efficiency and electric vehicle batteries, electrification of everything, that thematic. And titanium and some of the other products co-products that we'll produce tie into that, and just tying into the sort of national security, I guess, thematic that we've got going on right now. Titanium ties well into that, being one of the key products or key metals needed in the defense industry here in the United States. So I think we have tailwinds over even the short to medium term. One of the things one of the items I think investors should be really focused on is that it's probably never happened in history to this extent, but the US government is coming out and spending a lot of money on these sort of industries tied to all these thematics. So we just saw yesterday, you know, today's the 20th of November, October, just saw yesterday the Department of Energy announce and the White House announce $2.8 billion of grants. This is not loan funding, which is already there. There is large loan funding available for projects tied to the electrification thematic. But we saw $2.8 billion of grants come in to projects within the US tied to the manufacturing of batteries in the United States, from cathodes to anodes and everything. Now, 145 million or so was granted to Piedmont Lithium, which is the company I founded before IperionX. That is a huge amount of money. There's now the government still has tens of billions of dollars left in programs like that to focus on industries in which IperionX is going to be a big player in. So we're in a situation where, yes, the shorter term is choppy because of where inflation and interest rates are going, but definitely even over the short, medium, long term, there is a lot of funding and a lot of focus on the types of markets in which we are playing in.
You've also just reminded me of the kind of a period in the mid 70s, early 80s, when the oil price shock came through, and the US said, right, now we have to focus on efficiency. We have to make our engines work better. We have to economize. We have to make, and you just had this extraordinary step change in reduction in demand for kind of fossil fuels, not really because the standard of living dropped in any way, but just because industry adapted and innovated and changed the demand for fossil fuel. And I feel that now that we're coming into this period where there's this focus on renewables, on clean energy, there's going to be an equal, and also because of the geopolitical concerns that we've got, the availability of energy, particularly linked to Russian supply of gas and the European geographic crisis, let's call it, over available energy. The era of kind of abundant global energy flows is pretty much shattering. I think there might be quite a big focus on weight reduction and efficiencies, and that kind of plays into the kind of the titanium substitution theme.
So our thematic definitely, and what we're doing with production of low carbon, sustainable, circular titanium is fits well into that thematic. Not only is titanium used for energy efficiency in weight reduction of objects, but longevity of products as well, because it is corrosion resistant. It also plays into the clean manufacturing, the electrification, sustainability of everything, and circular economies, which we're moving towards. So we definitely tick on a lot of the key thematics which American investors are looking at today as well, and global large institutional investors are looking to get exposure to, whilst also the government is looking to fund. And that's why I think you see, that we have a very strong institutional shareholder base that are the types of shareholders which are looking at these sort of thematics.
Okay, well, let's look into that, because the Crux investor platform is really designed to provide insight for retail investors and people without institutional access and those kind of research facilities. And one of the things that can often derail an investment in a company is not understanding where those kind of incentives are, not understanding the motivations behind other shareholders on the shareholder register. So, I had, of course, I look at your presentation and I can see that you've got Fidelity, Boston at 10%, International at 7%. So Fidelity kind of at about 17%. You've got Riley Financial, B. Riley
Financial, yep.
B. Riley Financial at 5%, and you've got kind of about 30%, which is the insiders and the kind of associates. What would be really useful, it would be, could you just kind of talk to me about the evolution of the shareholder register, how it's changed over time, what kind of people were backing you right at the beginning after you when you created the company, and how that's changed over time? That'd be great.
So we started as you said, we started the company in 2020. We started as a private company. So the funding came from ourselves as shareholders. So we funded that initially ourselves, and that was a few $1 million to start looking at acquiring land in West Tennessee for our Titan project, and also start working with Dr. Fong and doing the due diligence around the technology. But then at the end of 2020, in December 2020, we backdoor listed or vended, RTO'd into a publicly listed shell company on the ASX, which back then was called Tau Commodities. And so that had listed maybe a few years before as an IPO with a gold project, which is typical in Australia to have these publicly listed companies which list on smaller assets and then go out there and look for projects or companies that they can acquire that can do a reverse takeover. So that company had over $4 million of cash in the bank at that point. And so we did the reverse takeover into that company. And again, we put our own money in on the back of that listing of another 2 million.
So you added 2 million, and that they had 4 million in cash. And then you had the assets. What was the kind of the pro forma ratio of those kind of various blocks? What did Tower Resources represent of the enlarged share capital?
So I think it was around 50%. I should actually know that, but we vended into Tower Commodities on a milestone basis. So we still have 2 milestones left, which is based on the development of the Titan project. Because back then we still had not secured the technology. We had only secured the licenses or the rights to the mineral side of the business, which is the Titan project. So the milestones were based on progress of the Titan project, and pretty substantial progress. So we're talking positive pre-feasibility study with an NPV hurdle of 200 million US, and then first production at the Titan project. So this is not, time or just, put a resource out. This is proper, get reserves and then get into production. So,
and what's the relationship with the kind of the tower shareholders? Are they now kind of, we were in gold, but now we're fully, we bought into the titanium story. We like the Titan mining project. We like the titanium technology. Are they still shareholders? I mean, do you still have a kind of a dialogue with them?
We've had a lot of, since between now and then, we've had a lot of turnover in the shareholder register. So, there was a lot of shareholders there at 6 cents, 7 cents. The IPO was at 20 cents, but when we did the deal, I believe it was at something like 6 cents. So there's been a lot of shareholder turnover on our journey up to, we peaked at $1.40 around that in Australia. Even today, we're still at close to 80 cents. So it's still probably a 10x from where we're there. So there's been a lot of shareholder turnover. We've had a lot of shareholders that have historically supported us in other companies buy in significantly. And then we've had, as you would expect, some shareholders that were in at those lower levels to exit. But I would say that all in all, we've got a pretty strong shareholder base that has followed us since then on market with buying, both smaller institutions and high net worth retail groups that are very that follow us for the long term. Now, what happens in the short term happens in the short term, but I'm very happy with my shareholder base at the moment.
And funnily enough, those high net worth investors are often relationship based. They're often willing to take a kind of strategic thematic on something. It's less common to see it with a big fund like Fidelity. So and I've worked with Fidelity as well, and they've got this system where they've got they take young analysts and they give them 1 or 2 years on a sector, and just by the time you're getting to the point where they're ready to invest, they move to another sector, and then you've got to start again with another kind of super on the spectrum brainy analyst who's never met mining before. But you've got two sides of Fidelity in there. So if you could tell me a little bit about that relationship, that'd be quite interesting.
So it's a good point, and it comes actually back to relationships as well. So as we were building this company, once we got past that first RTO, we then moved into a period of start really accelerating the build of the company, and we secured the technology as well at the start of 2021. At that point, we then started to build a strong advisory board from our network of people that we know. And we're lucky in that our networks are quite extensive. So we knew that we wanted to leverage that. So we built a very strong advisory board at the start of 2021. And it was really focused around, let's build a sustainable critical material company in the United States to reshore this issue, which will be titanium metal. Now, this is pre-Russia-Ukraine war, so we had a bit of foresight there that there was going to be serious issues in the titanium supply chain. And as we built those relationships, we brought in some really great people. One of which is Toby Simons, who's my chief strategy officer, and really has been instrumental in helping us build some of those. A lot of our relationships, in addition to a lot of our advisors as well. So as we built the thematic, which is something that a lot of these groups, if they hear they want to get exposure to, you also have to be able to communicate it to the right people. So that's where the networks or the relationships come in. So through our team, we were able to educate a range of investors, and early on in mid-2021, as we were kicking a lot of goals and hitting a lot of milestones, we were able to reach directly into one of the major fund managers in Fidelity out of Boston and London, and he was living in between London and Boston, that knew Toby Simons, and we were able to educate him and his team around what the strategic vision of IperionX is. And when you do that, when you're able, even if you're a small company, if you're able to reach out to a network or a relationship like that, they get interested. There's just no doubt. This is such a different story. It's not, let's build a gold mine and, they'll tell you to go back, come back. When you've got a feasibility study, this is a change to an industry. We're building a sustainable supply chain of titanium that includes ore in the ground all the way through to titanium metal, includes circularity. There's a vision here which is not typical. It's not a mining company. We are an industrial disruptive technology company which has mining as a feedstock or a mineral asset as a feedstock, but it's more of a vision of disrupting an industry.
So the mining is essentially just part of that kind of it's part of vertical integration. It comes back to security of supply rather than kind of we want to be a mining company. And what you've just described is a kind of investor who is looking at owning part of a business rather than trading part of a cycle.
Yeah, so we're talking about investors that are looking at the next 5 years, 10 years out, and wanting to own a business that's going to be what we hope to be a multi-billion-dollar business in the future as we hit our milestones. Yeah. So, this is a typical, this is part of Fidelity, which typically writes much bigger, very big checks. Invested a lot in, some in mining, but in minerals assets, but also in the technology side of the business, industrials. This is a very large fund. And so, they were interested and they cornerstoned the financing that we did in August of 2021.
And so what price was that at?
$1.20. And so they came in as a 10% shareholder. We then continued to progress the business. Unfortunately, the markets did what they did over this year, and they've been very choppy. And look, we as managers, it's tough not to look at the share price, but you've got to look at the overall vision and progress of the company. So you've got to put that to the side sometimes and just focus on hitting milestones and building the business. And so that's what we continue to do. And again, continue to educate different potential investors. And then only a month ago, as we looked at where the market was going over the next 6 months, and we looked at our budget over the next 6 months, we took the prudent choice to raise additional capital, even though we did, I personally do not like to raise capital at lower valuations. We did the prudent decision to raise capital to give us much longer runway and put us in a very strong financial position, which we are in today. And so we raised another Australian 24 million. The August 2021 placement was Australian 24 million as well. And again, Fidelity Boston followed their money in, but this time we also were able to secure a few other major investors, two of which, one, Fidelity International, again, a relationship-based, and not just, you just can't have the relationship and then show them something which is not right. Again, relationship-based, where we were able to get to the fund manager. In Fidelity's case, it was the fund manager who had invested in Piedmont Lithium and had done well there. So we were able to secure them as a major shareholder as well, and that's why Fidelity as a group holds 17% of the company today. Fidelity Boston followed their money in, and then at the same time we were able to secure B. Riley, which is one of the probably only remaining merchant banks in the US, which has a $2 billion private investment arm. Again, through relationships, get to that fund manager and secure them as a cornerstone shareholder as well, where they can, and this leaves us with a 23 odd percent holding by three major institutions that will continue to support the company over the short, medium, long term. And so you don't, for a company which has got relatively low liquidity, no research analyst coverage.
Yeah.
we have we have an institutional register, which is unlike you see in a lot of companies out there that are a lot bigger than us. So it's testament to what we're trying to do and the thematic that we're focused on, the type of team that we have built. So, I think that's right now there's a lot going on in the market, but I think retail shareholders should find comfort in there's these large groups that have done a lot of DD. They did do their due diligence, some extensive due diligence, and have come away and said this is going to be a transformational company over the medium and long term. So, what I give advice to people is I don't trade stocks. I just try and find things which over the longer term can make money. And for me personally, that's done extremely well. I couldn't bear the headache of trying to trade a day-to-day stock market. It's just
no. It's too much. You're right. It is really important to explain those relationships to the wider market, and thank you for doing that. My experience of dealing with the big funds like Fidelity, like Capital, and some others is that they, when I'm talking about Salazar, about copper, for example, they'll say our micro market cap fund, we can go down to maybe $250 million market capitalization as the bottom end of our scale. But really, we want you to be around $500 million to $1 billion to get into our micro cap fund. And it's such a different space, such a different area to the junior market. And there are always exceptions. So it's really nice to see that they're willing to come down and invest in at the time, probably an $80 million or $100 million Aussie stock or US stock.
Mm-hmm. And that is relationships, but also the story and
of course.
Yes, most of the tickets that these fund managers write are minimum 25 million, and for them, and it's usually a minimum, $500 million market cap company. That's small to them.
Yeah.
This is one of those exceptions where they see it being a multi-billion-dollar company and they see the vision and they like the story.
Although I have also taken comfort from having a major investor in there, and they got it wrong as well. But so you can't not do your own due diligence. You have to do your own due diligence and understand exactly. Yeah, good. Now, moving on from your shareholder register. Well, actually, kind of still on that, can you just talk to me about the kind of incentive packages amongst you and the team and the executive, and options and salary, and how you have those conversations at the board level? And I also noticed that your chairman is an executive chairman. We'll come on to that in the next thing. But first of all, kind of incentives. How do you manage that?
So as part of the vending of the asset, co-founders like myself, we received those shares up front and then shares on milestones. And that includes a few of the people on my management team or executive team. But then if we move forward, as we bring people on that weren't part of that original team in 2020, and including myself has taken the CEO role, there has been upfront share-based incentives to get these outstanding individuals involved. And typically these share-based incentives have been performance shares based on as we've moved to operational targets. Some of our operational personnel have got operational targets they need to meet, but by and large, the share-based payments for myself and some of the key execo are based on share price. So my incentives, for instance, are 6 million shares split over 3 transfers, equally over 3 tranches, with hurdles in the share price of $2, $3, and $4. So this is not like what you would see again in a lot of other companies where you just have, a 20% increase. Layups. This is real value creation. You got to remember that these were issued when the company was maybe 40 cents or something like that. So it's a real, and then my execo has seen that as well, because we see this company being worth a lot of money and a lot of value in the future as we hit our milestones. And for us, it's not, let's do it over the next year or two. Let's do it over the next 5 years. And that's typically what I've had to spend my time in when I've built businesses in the past. It was a 5-year journey with Piedmont Lithium. It was a 5-year journey with my first company I had. And it was, I mean, we created billion-dollar businesses. It's not, sometimes it can happen really quickly and you do get lucky and it happens in a couple of years, but it mostly takes some time. And so, but also realizing that, you know, we wanted to message to investors that that's the way we look at it. So most of the performance-based shares are structured in that way.
Great, thank you. Again, useful clarity. Now, your chairman, executive chairman, how come he's not a non-executive chairman?
He's very active in the business at the moment, and will probably remain that way over the medium term as well. So Todd Hannigan is someone that I've worked with for a long time and have a deep amount of respect for. He was instrumental in building what was one of the most successful coal mines or coal developments in Australia. It was one of the largest coal IPOs in Australia back in the 2009 timeframe, I believe, or 2010 timeframe, Aston Resources. But was also involved a lot in Piedmont Lithium, both as a shareholder, a major shareholder, and on the board with me. So in the case of IperionX, he's heavily involved in the strategy and the strategic direction of the company. So we're talking on a day-to-day basis. We communicate between executive co and executive chairman. We communicate probably on a day-to-day basis.
And is he based in Australia or in
based in Australia, but like all of us, travels a lot. Most of the team, other than our company secretary and Todd Hannigan, are based in Australia, based in the US.
Toby Simons, is he based in the States?
Connecticut, yes.
Connecticut, okay. In Oz. Good. You're jumping on to your non-executive board. You've got, I really like it. You've got 3 women and 1 bloke. Vaughan Taylor, who spent 10 years running the Bennett family money, is your only independent male board member. Then you've got 3 women. Lorraine Martin, who's had a long career with Lockheed Martin, question mark, any relation to the family. Beverly Wise, who spent 30 years in the aerospace industry with Boeing, and Melissa Waller, who's pension fund linked, state treasury of North Carolina. You know, just the makeup of your non-executive team is very investment, very aerospace. I think. Could you just kind of
I would say
commentary on that? Yeah.
It's a good question. So it's very it's got sort of half. You got Vaughan Taylor and Melissa Waller, who are very sustainability technology focused from the investor side. So that's what I would say. I mean, Melissa is very well known in the ESG investing circles in America, focused on advising pension funds on their ESG strategies. And then you have Vaughan Taylor, who was very focused on the diversifying the Bennett family away from iron ore and into technology and those sort of plays. So definitely not a mining investor, although has invested in mining companies, but very much a lot of work with startups, a lot of work with investing in the US and diversifying that family's money away from mining into more technological based investments, I would say, or forward-looking investments. And then we have Lorraine Martin and Beverly Wise, who were aerospace, so had a connection with both defense and the use of titanium. So both Boeing and Lockheed Martin use a significant amount of titanium in their aircraft, and so they have had experience across or understanding the supply chains that go into that. So understanding somewhat the titanium supply chains, but I would say more so experience around operations that run advanced industrial operations. I would say more manufacturing, more dealing across complex businesses with complex supply chains, lots of people, culture, and that's what really attracted us to Lorraine and Beverly. We're trying to build a business here. We're trying to build what will be quite a substantial business here, where yes, today we're not that many people, 30 odd employees or people, but in the future we could have multiple manufacturing sites, looking at multiple different types of customer bases. A lot of defense industry connects as we're already starting to build. So we wanted shareholders, we wanted directors that are helping to guide us through what we need to do as a company to set ourselves up to be that type of company in the future, to have the right culture, to have the right processes, to have the right thinking about how we become a major industrial company. We look towards, and to be able to attract that right sort of talent and the right sort of shareholder base over the longer term. So again, it's definitely not what you see in a minerals business where we're just building a gold mine or building, something like that, and we just need directors that have come out of the mining industry. We're building a business here, and so we took the view of looking at directors who have had broad experience around building or being part of businesses that we aspire to be like.
It's really interesting because what you've described, what we've been talking about, is kind of forward-facing future. You're looking out to the future, looking at where you want to be in terms of a business.
Yeah.
When I look back at your share price and I compare it with, I don't know, I've compared it with a couple of other companies. The one it fits most closely to is a mineral sands, a titanium kind of explorer developer. You've moved in lockstep for the last couple of years. And yet you don't, the way you talk is you don't see yourself as a mining company. It's just, that's part of the story. When one looks forward to the kind of the valuation or the way you want to market your company, who will you want to be comparing yourself to? Maybe not today, but what are your targets? What kind of company do you want to grow into?
It's an interesting question. So I can understand that that a lot of the retail investors and the people participating in the day-to-day trading of the stock are more trying to look for comparables, and still we've got a lot of the shares in Australia. Look, I think on the NASDAQ, we trade a lot more with the general market, and you see that the actual NASDAQ trades typically 10% above the Australian market even today. We get a lot more of an mining-focused investor here. We have more of an industrial-focused investor, but right now with the way the markets are choppy, it's a little bit different. But if we look at the Australian or the UK investor, which we've got some UK investors, there definitely is focused more on trying to compare us. And I think that's fine. They can look at the Titan project and they can put a valuation on it, but it's tougher for them to put a valuation on our metals business. But we don't see ourselves as a mineral sands play. We see ourselves as building into a industrial company that will solve a key supply chain here, create a circular, sustainable titanium metal supply chain for the Western world. What sort of companies could we compare ourselves against? I think if you look at some of these more valuable steel industry, stainless steel producers, Outokumpu, ThyssenKrupp, I think if you look at integrated industrial companies here in the United States, I look at groups like Tronox and Chemours. Although they're in the titanium pigment industry, it still has an integrated approach, and I really actually like how they run their businesses. Chemours has got a very strong focus on sustainability as well. They're integrated somewhat with their feedstock. Tronox is heavily integrated with their feedstock, but is considered a titanium pigment company, although they have one of the largest mineral sands operations business units in the world. So I like those sort of comparables over the longer term. For us, we're tackling a very large market, which could be not just titanium metal, but metals or lightweight metals in general, aluminum, stainless steel, ultra high strength steels. And so anything that's integrated in the industrial sector, we're sort of targeting. We're a bit of a one of one, so it's tough to put a direct comparison to. And that's why we try to focus on telling the story, but also just executing on our strategy. And executing on our strategy means continuing to build a business, both the Titan project and our technology business. And we've made a lot of strides over the last 12 months, definitely I wouldn't call it technology per se, just technology. It's industrial technology. So we've actually got operational titanium metal facility producing titanium metal today. And we're building a much larger facility in the next 12 months in Virginia, as we announced only a few weeks ago. Yeah. But along that journey, also signing up the right customers to show that, this is what we're executing on, I think will help educate investors as to the potential value of that part of the business over the longer term.
Thank you so much. We've covered kind of the history, the kind of the culture of what you're trying to do, and also the kind of the forward-facing looking aspirational plan for the company. I think just let's bring it right back to the immediate and the tangible and the kind of the real of what you want to be delivering in the next 3-6 months. What are or maybe 9 months? What are your goals to the middle of next year, say?
So there's a few key goals which I think build a lot of value. So if we take it from something which the retail, some of the retail investors, especially ones that tune into to Crux Investor, I think there's the Titan project, which is on the mineral side. So this is a very standard, straightforward heavy mineral sands operation with two standout factors or attributes. And one of them is it's in the United States. So that's in infrastructure rich, middle of Tennessee, straightforward development, no need for major infrastructure investment, very straightforward. We think it's one of the best undeveloped heavy mineral sand deposits in the world. Now that Coburn and Sheffield are building, Coburn's being built and the Thunderbird project are being built. That's owned by Strandline and Sheffield Resources. And then two, this has a substantial co-product of monazite and xenotime, which are the rare earth containing minerals, and so a lot of value for a US rare earth supply chain. So those two attributes make it a highly valuable project. So although over the longer term we're reshoring titanium metal, we need to continue to progress the Titan project because longer term it's got value in being our source of feedstock or raw material supply chain into the technology we're building. But shorter term, I think there's a lot of value to extract in developing what is a rare earth, both light and heavy rare earth containing project in the United States, which can help the electric vehicle supply chain. Rare earths are very topical, as you know today. So we will be a major source of rare earths for the US, especially the heavy rare earths, dysprosium and terbium.
But the milestones in the short term. So if you've got studies,
definitely progressing that project. So pre-feasibility study, looking at permits. We have already got MOUs for offtake, but progressing those MOUs into more substantial agreements. And in the shorter term, 6, 9, 12 months out, as we move towards mid next year, there's already a lot of interest in the asset from a joint venture strategic investment angle. So people want to be involved in an asset like this not because of all the minerals that it's going to produce. The titanium minerals, the zircon minerals, and especially the rare earth minerals are all in short supply. And especially on the rare earth mineral side, there's a need for additional rare earths, especially the heavy rare earths, which we have a lot of, especially in the United States, to drive forward the electrification thematic. So there's a lot of potential opportunities there from a strategic investor angle, not at the head parent level, at the IperionX level, but at the project level, to get involved in the project and drive a lot of value forward. So I think when you look at the Titan project, lots of value there. It has a $700 million NPV, de-risking that and helping to have that NPV some part of that NPV flow through into the ultimate value of IperionX is something that we're focused on. But then turning to the metals side of the business, whilst we talk technology, people shouldn't think this is technology that's done in a laboratory or at bench scale. We have a fully operational pilot small scale facility. We produce titanium metal powders every day as we speak. And we're producing more and more, and thus engaging more and more with some of the partners that we're looking to secure. So we announced that as part of the financing, we're going to continue to upgrade our pilot scale facilities. We've got an excellent operational team out there, driven by an excellent senior group of personnel, and we are really kicking goals. And we're able to deliver titanium metal powders into supply chains from today, where we're producing some products. So we announced already a collaboration with Panerai, where we are essentially taking our titanium metal powders, using 3D printing to produce blank
watch blocks,
little watch cases. Actually, I'll take one out. I think I've got one here as an example. I've got a bunch of little titanium things here, some of which I can't show you because they're other customers, but we produce if you look at little watch cases like this. This is a blank that is then taken by the OEM, by Panerai in this case, and it's machined to its final form. So this is a little bit of extra titanium on top of it, and then they machine it down into a watch, and Panerai's watches start at, I think, $10,000, $12,000 a piece. They have about 60,000 watches they produce a year, but they're part of the larger Richemont group, which also owns Cartier. RWC produces in excess of 600,000-700,000 watches a year into the luxury market. And then you move from there, and generally the Geneva or the Swiss luxury watch market is in the millions of watches a year. Now that's a very high margin product that we produce, and it's an excellent partner to start with, because what it shows is that for somebody like Panerai or the larger Richemont group, they're not necessarily looking for a lower cost of supply. They're looking for a more sustainable supply, because they're a very consumer-facing business. It goes on your wrist. I actually own IWC watches, so it goes. You're looking at
it's a story.
What the story of that watch is. Is it sustainable? But also, is the mechanical properties and the surface finish good? So if you look at that product, if it's good enough for a luxury watch, that surface finish, the mechanical properties should then be good enough for a lot of other applications where people either wear it or hold it, in the smartwatch, smartphone area, in the consumer electronics, personal consumer electronics area. So that is like the tip of breaking into a lot of other products which are that sort of size, where today there's a lot of products which people hold, wear, which are made out of stainless steel or aluminum. Some are made out of titanium, like you do have the Apple Ultra watch, it's all titanium. You look at those sort of products and you say, well, we are the only company in the world which could do it, 100% recycled, 100% or almost, net zero carbon as well. And so it helps to showcase, hopefully to investors, that we can break into those markets. Now, not only that, we are producing these watch blanks today, and we are increasing the scale of our production. So we expect to be delivering watch blanks, or we are delivering watch blanks to Panama as we speak. So,
coming back to kind of the news flow that the investors can look at from the metals business, let's say until the middle of next year, am I right in thinking you're looking to deliver a few more relationship contracts and also work on the new facility?
Yeah, absolutely. So, and I would put one more thing in there, and we will start to generate revenue, albeit relatively small, until our new facility is up and running. It shows that people are paying for our product and are paying for the showing that they're paying for a high quality product, that they want an American sustainable recycled product. And so there's the relationships of actually building products and getting out there and selling a product, and that's a lot of the journey of some of these other industrial technology companies. Is they might have a product which people say, oh, that looks great, but they can't get sales. And so we're showcasing here that even before we've built a fully operational, or would be much more of a commercial scale facility, even though we call it a demonstration facility, at 125 tons per annum, it would be, one of the largest titanium spherical metal powder facilities in the world. We're able to sell product even ahead of that time, and we're able to secure those customers ahead of that time. So, in the next 9 months, we expect to have the larger facility operational about this time next year. But ahead of that, we will continue to add customers. Panama was, I think it took over 6 months of testing and work with them to have them signed on. But I think there was some milestones they want to meet early next year with for the titanium metal that pushed them to want to sign earlier. But we are working in the automotive sector. We're working on the consumer electronics sector. We're working, of course, in defense. And I think that there's more customers to come there. Now, we can't work on every customer because we're limited powder production, limited human resources, but we're working on some very big names. Richemont is one of the biggest names in the luxury market. We're working on some of the biggest names in those other markets that I just mentioned. And signing them on would be big ticks of approval, but also not just sign them on like you would see a lot of mining companies do, where they sign MOUs for sales that are going to be in 4 years' time. And you get 4 years down the track and they kick it down the road another 4 years. This is sign them on and actually supply product. We are supplying prototypes to a lot of these industries. And we are supplying powder made into, tensile bars, doing mechanical testing across a range of industries. So, this is going to be signing up customers who are then going to start. We will start, just like Panama, delivering products into as soon as we sign them up, and then as we get our larger facilities up and running, sell them, titanium metal, and that's all what we're really targeting over the next sort of 6, 9, 12 months.
Brilliant. Now, and we will have to wrap it up. I've got one last question, which is probably worth a kind of a 2-minute answer. Is how are you financing? What are your concerns about building the 125 ton per annum new facility? How much margin have you got financial? What's your capacity? What's the cost? Just if you could kind of outline that'd be really helpful.
Yeah, it's a great question. So, we released, when we announced Virginia as the site, we released some great detail in the appendices. So it's about a $20 million build. There's about $4.5 million coming from the state of Virginia, but also the local council or the local development association there, which actually built the building. It's a shell building. They're doing the upfit, and then they will lease that building back to us. And that upfit is a lot of the electrical work, a lot of the HVAC included. So about 4.5 million of that 20 million. So, we've got quite a chunky contingency in that build, but you have about $15 million remaining, of which $10 million is equipment. And a lot of this equipment is movable equipment. This is sort of plug and play equipment. It's unlike a mineral operation. It's furnaces, it's crushers, it's leaching equipment, stuff like that, that can easily be moved between and sold, so it can be financed quite easily. So you can get operating leases on that sort of equipment. So you're left with relatively small, essentially what would be working capital commissioning, which is about 5 million in that building. Now that facility at 125 tons per annum, we put out some numbers there, about $120 a kilo with a 50% contingency to manufacture the titanium spherical powders, and we think we can bring that down as we scale significantly. But today, titanium metal powders sell for anywhere from $250 to $300 a kilo. So you've got very healthy margins there. So it's something that we think is easily financeable. We're in a strong financial position to drive that facility forward. But we think that there's a lot of interest. Now, there's a lot of interest from these partners that we talk about to also, some of these partners have specific funds, manufacturing funds, which help to scale their supply chain. And so we feel that it's not a big build, 15 million left to finance, of which 10 is financing. So you've got 5 million left over. There's a range of customers, and then there's also a range of government programs out there, especially in today's world, which, would easily fund those sort of things, especially something that is targeted towards sustainable production, clean manufacturing, defense orientated products, some of which will be in the future. So,
but you could you've got the cash to cover it already, though, don't you? I mean, so when you talk about financing,
we've got the cash to take us through to the end of next year. If we're able to secure a good financing package around equipment, then we will have, we will have the capacity to be able to build it. We don't want to. We want to make sure that we remain in a strong financial position, and that's why we're focused on getting the right financial package there, but also getting the right customers involved, because ideally we don't spend anything to build that, and we have between financing for the equipment and government incentives or government grants or customer interest, customer prepayments or stuff like that, we have that financed. That would be my ideal, but we have a good cash balance too. We're already putting deposits down and buying some of the equipment. Actually, one piece of equipment that we thought was about $1.7 million of the build of that 20 million. We just bought it for, I think, 150 grand secondhand. So already we're cutting into that. We were pretty conservative on those numbers. So
yeah.
So
Great. Taso, thank you. What a fascinating conversation again. Our time is up, but I look forward to seeing the progress as you go through, and watch your story with great interest.
All right. I really appreciate it, Merlin. We'll talk again soon.
Good stuff.
Thanks.